Well, that's what markets do, don't they? They overreact. Yeah, I have to say the selling seemed to accelerate about 15 minutes into his press conference. He said politics don't play a role here. Uh, obviously, given what President Trump has said, politics don't play a role, and nothing's going to deter them from doing the right thing.
Mm.
So selling seemed to accelerate at that point. So we were up 285 points on the Dow at 2 o'clock, and we ended down like 350. I mean, go figure. A 600 point swing.
Sure.
Amazing story.
And Chris, that one strikes me as a little bit odd because ultimately, if you're a long-term investor at least, surely you want a central bank that is independent from the politicians. Politicians have a very different time horizon. We know they can have an inflationary bias as well when it comes to the fiscal stimulus they want to put through. And altogether, we're hearing a central bank that says we will be independent and do what's right based on the fundamentals.
Yeah, you would think that, but the market's been kind of stubborn along the way, along this gradual rate hike path that the Fed has embarked on this journey. The market has tended to disbelieve the rate hikes, the rate path, almost every year. Every other meeting when they go, the market thinks they're not going to go that much higher.
Right.
So when we came into the meeting today, Eurodollar futures, where 3-month LIBOR is going to trade in future years, they weren't looking for any additional rate hikes from the Fed, maybe a
Mm.
half of a rate hike. So the Fed was looking for 4 coming into today. Now they're looking for 3. The market's not looking for any. So, I mean, it tells you that traders out there feel the economic outlook is such that they don't want the Fed to raise rates. They don't think it's the right thing. So it's
Mm.
kind of a battle here.
And Chris, we are looking at the 2-year U.S. Treasury yield, the 10-year, just how narrow that spread has become. Do you think that is sending some warning signals here about the growth outlook, or are investors looking too much into that and the risks of a potential inversion next year?
Yeah, I don't personally feel it signaling a recession, but there are so many people out there. I mean, don't forget the other day, the yield curve narrowed, flattened quite a bit, pretty much down to where it is now after
Hmm.
today's bond market rally. Uh, it, it, whenever the curve flattens like that, then you get more people saying, aha, see, our one reliable, now it is, our one reliable uh, recession indicator, the inversion of the yield curve is all but complete. So all these things go into it. And in fact, I mean, we've had these surveys of C-suite officials at U.S. corporations, CFOs, and 80% of them think we're going to be in a recession in the year 2020. There's
Hmm.
something about the time limit for an economic expansion that is bugging people, bugging investors in the market, maybe more active traders more, where people think the economy can't run more than 10
Right.
years or problems start to develop.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.